In this lesson, we'll be discussing health savings accounts. After completing this lesson, you will be able to identify HSA documents, understand HSA situations, recognize out-of-scope scenarios, reference HSA resources, and input HSA information into TaxSlayer. First, let's talk about HSA documents. The 5498 SA will report total contributions, and the taxpayers, not including the employer's contributions, can be taken as an adjustment to reduce taxable income. The 1099 SA will report total distributions, and these distributions are tax-free if used towards qualified medical expenses. But the distributions will be taxed as other income if used for any other reason. Now let's talk about HSA contributions. Again, the total contributions will be reported on a 5498 SA. And the total contributions will include the taxpayer's contributions, any other people's contributions to the account, and the employer's contributions. And you'll be able to know the employer's specific contributions by looking at the W-2, Box 12, Code W. Now, there are limits to the amount that someone can contribute to an HSA account. And currently, for tax year 2016, those limits are $3,350 for self-only HSAs and $6,750 for family HSAs. And you can increase these contribution limits by $1,000 if the taxpayer is 55 or older. Now let's talk about HSA distributions. Again, total distributions will be reported on a 1099 SA. If the distributions are used towards qualified medical expenses, then the distributions are tax-free. If the distributions are used for other reasons, then the distributions are included in other income on line 21 of Form 1040. And they're also subject to a 20% tax, which will be on line 62 of Form 1040. There is an exception to the 20% tax, and that is for distributions made after a taxpayer died, became disabled, or turned 65. Now let's talk about HSA out-of-scope scenarios. The return will be out of scope if the taxpayer exceeded their contribution limit. And you can figure that out by looking at the 5498 SA, Box 2, and comparing it to the contribution limit. Now, the contribution limit might change year to year, so make sure you're comparing to the most current contribution limit. Now, this will not be out of scope if the taxpayer exceeded the contribution limit but withdrew that in a timely fashion. Other types of scenarios that are out of scope are Archer MSAs, Medicare Advantage MSAs, health reimbursement arrangements, and others. Let's talk about HSA resources to consult. In the Pub 4012, you can go to E4 to determine eligibility. Remember, for someone to be eligible, they have to have a high deductible health plan. And as of 2016, an HDHP is defined as an annual deductible of $1,300 for self-only plans and $2,600 for family plans. Now, also in the Pub 4012, there are screening tools. Part 1 is to screen for contributions to an HSA, and Part 2 is to screen for distributions from an HSA. You can also consult the 8889 instructions and Pub 969 for more information. Now, when will a site coordinator make a phone call to the leadership team members? They're probably going to want to call if the taxpayer was not enrolled in the HDHP for the entire year, because this causes us to either use the last month rule or the sum of months rule. More details in the 8889 instructions. Now let's talk about HSAs and TaxSlayer. To access the entry screen, you're going to want to go to the Federal section, Deductions, Adjustments, and Health Savings Account. And the first thing you're going to do on the screen is choose whether it's a family plan or a self-only plan. Next is the HSA contributions section. The first blank asks for HSA contributions the taxpayer made during the tax year. So in order to get that exact amount, we can look at the total contributions on our 5498 SA in box 2, and we can subtract out any employer contributions, and that can be found on the W2, box 12, code W. And that will be the amount that the taxpayer can put in this first blank that counts towards the adjustment to taxable income. Now, in the blank that says employer contributions made to your HSA for the tax year, we don't need to re-enter that from the W-2. It will automatically be pulled through, and so we can leave that blank empty. The other part that we will have to fill out on this screen will be the number of months during the tax year that the taxpayer was an eligible individual. Most often that will be 12 months, but if it's something other than 12, remember again we'll have to use our 2 other modified rules, which we can find more information about in the 8889 instructions. The other 2 blanks on this screen are for situations that are out of scope for us, so we will never use those. Then we get to the HSA distribution section. And the first blank asks for the total distributions received during the tax year from all HSAs. And we can find this on the 1099 SA in box 1. Now the second blank asks for distributions used for qualified medical expenses, and so we'll verbally ask the taxpayer how much of that distribution listed on their 1099 SA was used towards qualified medical expenses. And we're going to use the same criteria that we use for medical expenses that can be used towards itemized deductions, with only a few differences. And so whatever amount they use towards qualified medical expenses, we will put in the second blank. Now, if that amount in the second blank is less than the amount on the first blank, that means part of the distribution will be taxed as other income and will show up on line 21 of Form 1040. So any distribution that was used towards expenses other than qualified medical expenses will be taxable income. Now let's look at how an HSA affects the 1040. On line 21 will be any distributions used towards something other than medical expenses. On line 25 will be the adjustment, so any contributions that a taxpayer made toward their health savings account can be taken as an adjustment to taxable income. And remember, on line 25, that adjustment does not include any contributions made by an employer. And then line 62 will include the 20% tax on distributions that were used towards something other than medical expenses, with a few exceptions, which we mentioned earlier. Now that you've completed this lesson, you will be able to identify HSA documents, understand HSA situations, recognize out-of-scope scenarios, reference HSA resources, and input HSA information into TaxSlayer.